Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Peterson.
All right. Welcome back to another episode of the Real Estate Investing Club. It feels like I haven't done a recording in months because I actually just got back from a due diligence trip down in Texas, and it was 105 degrees down there, absolutely sweltering. So you Texans, I have a lot more respect for you now. It's I just can't do it. Living up in Seattle, 70 degrees, that's about as high as we get here, and that's as much as my skin can take. So props to you guys. But enough of that. Today we have a great interview with Scott Jelinek from lost the place, slowflip.com. Scott is a master at the flip, and we're here to talk about that. So Scott, thank you very much for hopping on the show.
Thanks for having me. We're doing coast to coast today, Virginia to Seattle.
There you go. I love it. Scott, before we jumped on the recording here, I told you that we'd like to start with stories. So why don't you take us back to the beginning of your story? How'd you get started in real estate?
So I'm going to have to shorten it for you because you said you like to make this quick, and I started all the way back in 1994. So that's a long story. But my first house I bought was what I don't know if you were investing back then, but it was called non-qualifying assumptions. They did away with them in 1987 for FHA and 89 for VA, but it was almost like a sub two, but with the bank's blessing. All mortgages back then were assumable, no credit check, no job, no anything.
Okay.
And the mortgage company put the mortgage in your name. And so I bought my first one, $5,000 down, take over payments. And I was a landscaper at the time. And then shortly after I bought it, one on the block came for sale for $2,000 down. And again, without knowing anything about real estate or values or equity or anything, I just felt like I got ripped off. So my genius brain said, well, why don't I buy that one also, right? And cost average. And that was my first time I even thought about real estate, because every month the tenant would pay me and I would pay the mortgage, and they would pay me and I would pay the mortgage. And it became an obsession in my head to buy. I just became obsessed with, let me buy, I used to say $1 million worth of these, and then I can just wait out 30 years and I'll be a millionaire. And that was my plan way back then. And that's the short version of how I got started. And I've been buying ever since then.
Nice, man. I love it. 2,000 down. I wish, if I could buy a house for 2,000, that would be fantastic.
Yeah.
And you said that was the early 90s?
1994 is when I bought my first couple.
1994. All right. So you've got some experience under your belt. Since that point, I mean, tell us a little bit more about your strategy today. I know you have a lot of experience, not only in real estate, you're an entrepreneur, and so you got a lot to talk about. Over 800 deals done. What was the kind of evolution of your strategy, of your approach to real estate since those first two acquisitions?
Well, I'm going to give you a painful story, but so I became obsessed with buying, and in 2001 was the first time we started having appreciation from the time I was in business, right? And so I started getting involved with real.
Wait, pause there. So you didn't have appreciation from 1994 to 2001?
No, we didn't have appreciation from the mid 80s till 2001. I was buying houses for the same price that they bought them for in 86 and 85 and 87, and I was just taking over their mortgages. There was a flat market. And so in 2001, in 2001, these same houses that I had bought for 65, all of a sudden I'm calling and they're selling me 90 grand, 110. And I'm like, these people are out of their mind, right? But I started going to real estate investing seminars and reading real estate investing books. After I've been in it now, I had 20 properties by this time. I figured now it's time to learn what I'm doing, right? And so I did what everyone taught to do, and they still teach to do, which was I parlayed it all. I refied everything and I bought more. And I got to 84 properties by 2007. And, and I always tell people, I said, everybody says the bust was 2008, but I assure you it was 2007 because I got my QuickBooks to prove it. And in 2007, I got crushed like a bug, right? Overnight, I had 30, 35, 40% of my people not paying. And we couldn't sell anything because the banks were closing down. There was no market to sell at the time. And the banks were taking stuff back and selling them for pennies on the dollar or what they were. And so I got smoked. Well, after getting smoked, I lost about 55 houses to foreclosure.
Wow.
After
Jeez.
getting smoked, I still had about 30, and I started looking at who was doing well. Most people went back to their jobs, right? Most people that got in during the boom went back to their jobs, but some people were still killing it. And these were the older guys. And so I started having lunch and started trying to, find out what are they doing different. And one of the things they all did different, which everybody hates when I say it, they want to strangle me. And I agree. In 2005, I would have strangled me too. Is they all owned everything free and clear. And I was like, free and clear, that's so stupid. You got to use equity and leverage and all this great stuff everybody teaches, and they still teach. And then prices came plummeting, and I started coming up with a strategy on how could I take advantage of these prices. I can't buy free and clear. I had a ton of money. I had almost $1 million in cash, and I burned through it before I lost anything. And when I ran out is when I lost stuff. But prices were so good now that I came up with this strategy of I'm buying with private money as short term as I can. So I buy on a 5-year mortgage. But instead of dealing with the landlord headaches that I used to deal with, I sell them instantly on 30-year mortgages. But I buy them wholesale. I sell them what we call super retail. And then I buy on short-term mortgages and I sell on long-term mortgages. And that's the short version of how the slow flip came to be. We crush it because we buy houses. When I say these numbers, especially being in Seattle, you'll be like, oh, there's no houses for that price. We'll buy houses for 30 grand, and we'll buy them on a
30
5-year
grand
mortgage.
in today's market?
Today, right now, we still do it. Bought 6 already this month. Yeah.
Which and you're talking about Virginia?
Well, we still buy in Virginia. In Virginia, when I get deals, they're averaging 50 to 60. But we buy Midwest houses. We buy a lot out there.
Okay, yeah.
So I currently own 178 houses. About 60 of them are Midwest, and that's because we started moving out there because they're readily available and the numbers work. Where we can buy them at 30, and even on a 5-year mortgage, even paying 12% interest, our payment is $667.33, but we instantly get $875 a month. Only we get it for 30 years. So our mortgage is for 5 years and we sell it for 30 years. And it's just amazing. The cash flow on them is absolutely amazing.
Yeah, no, this is an interesting strategy. And it's something I haven't heard yet. There's nothing new specifically about the individual mechanisms that you're talking about, but as a whole, I haven't really heard this as a strategy that people have been executing. So I'm interested. I'm already intrigued. I love it. Let's dive a little bit deeper. So you're looking at single family houses. This is not commercial. You're not looking multifamily. You're not looking self-storage, single family houses. And are you marketing to they're only free and clear properties?
We buy them. We don't have them financed, so they don't have to be free and clear as long as the numbers work, because we're buying them with private money. So we buy them with private money on a 5-year mortgage. So a private lender will loan us the full purchase amount. And most of my students, they do the same thing.
12% interest or
at 12% interest. So everybody's like, that's so high interest. And I'm like, trust me, the numbers work. We're not paying it. Our buyer pays it. And then we immediately turn around and sell it.
And
we generally buy them at 30.
The 5-year mortgage, that's a 5-year balloon.
No, amortized.
Amortized on 5 years at 12%.
30,000 at 12% for 5 years amortized comes.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
It looks like the internet connection's going out just a little bit. If you guys can still hear me, I'm going to keep talking until Scott comes back. There he is. He's back. Scott, can you hear us? Scott, are you there? Looks like we may have, I'm going to pause the recording real quick and we'll be back in 2 seconds. All right, we're back. Live episode like this, sometimes you just got to deal with technical issues, but we have dealt with it. We each checked our house to make sure nobody was watching videos, so we're not going to have issues here. So, Scott, let's dive right back into it. We were just talking about your strategy, the
And the
5-year mortgage.
amortization.
That's what you get from
Right.
the private lenders, and it's not amortized on a 30-year. It's amortized on a 5-year,
5 years
usually at
and
12%.
no balloon. So we make
No
60
balloon.
payments, and the 61st month, we have no payment left. It's free and clear at this point. And now the money that we're collecting is 100% ours. So the
Awesome.
first 5 years, we don't really make much money. We collect 875, we pay out 667, taxes and insurance. We really don't make anything. And that's why people hate it. But I'm like, there's a saying I always tell people. I said, I've heard it. I didn't make it up, but they say if you do what's easy, life will be hard, and if you do what's hard, life will be easy. And this is hard because the first 5 years you're not making money, but then once you get that 61st month, life is easy.
Yeah, it makes a lot of sense to me. And so you buy them. Let's just use a specific example. Let's say you're looking in just Detroit, Michigan. You find a house for 30,000. You buy it with this short-term money, and when you sell it, you're selling it obviously for more than 30,000, correct?
Typically 89,000 is our average sales price.
So what's your average buy price?
The average buy price is about 30 grand. Now we
Oh,
get them sometimes 15, 18 grand, 20 grand, but the average is 30.
interesting. Okay, so you're looking at pennies on the dollar here. 30, about you know double is, or more than, actually triple is what you're selling it for. And so you buy
Correct.
it at 30,000 and then you sell it at
89.
90,000
Yep.
with a 30-year seller finance note.
Correct. Now I'm going
Interesting.
to ask you, I'm going to answer a question you didn't ask. Why would someone pay 89,000 if it's available for 30, right?
I
Because
know the answer to that,
yeah,
actually.
because we sell the financing and the house comes with it. That's exactly it.
Yeah.
We sell the financing.
Yep. So I'm assuming you're selling this property to people who are generally have a difficult time getting a note from or a mortgage from a bank, or are you just marketing this to pretty much anybody
So
who?
sometimes people that have a difficult time, sometimes because they're self-employed and they don't have the proper tax
Mm-hmm.
records, or they get paid in cash or whatever it may be. And then a bulk of our properties, which is 2005, Scott, that's me. I always reference. We sell to a lot of investors who buy because they can get it for 3 grand down and they can make a $200 a month spread. And so they do what I used to do. They just want to acquire properties and make that landlording cash flow, which I'm fine with because I don't want to be a landlord. I operate just like the bank. We
Right.
we just process payments. We don't fix toilets or leaks. We just process payments every month.
Nice. I love it. So I mean, there's a lot of contingencies in this strategy that I can see, especially you got to make sure that you're buying it at a price, or you have to be really confident in your sales price at the end. So
Correct.
how do you gain that confidence when you're looking at a property for 30,000? How do you know that you're going to be able to sell it for 90 without doing the rehab? I'm assuming in this strategy you're not actually going out there flipping the property.
Never even see
Um,
the properties.
yeah.
So we never even see them. So I'll tell you exactly how we do it. So when we're in a virtual market, what we do is we run, and I'm sure you know what this is, we run a ghost ad. If we pick a neighborhood in a market we've never been to, we'll run an ad with a similar house, similar picture, similar structure, financing, 3 grand, 875, similar everything, just to gauge the response.
Mm,
And some markets we'll go into, there'll be 3 or 4 responses in a day, and we won't mess with those. Most areas we go to will have 70, 80, 90 responses in a day. And now we know we only need one buyer. And so once we have a response like that, we know that it's good to go. We can buy a house there and it will be filled instantly.
interesting. I love it. I like this strategy just because of what you just mentioned, that you are not the landlord.
Correct.
We own mobile home parks and we own multifamily, and all these situations where you have to deal with being a landlord, or at least deal with the property management company, which is in and of itself is another job.
Yeah.
I know it's not
Yep.
super intensive and it's definitely worth the money that you're getting, but it's still something that you have to do. In your strategy, that's completely eliminated. So you are just dealing with, I'm sure you're giving this to a note servicing company, correct? So you're not
I
even.
am not. Now, some of my
Okay.
students in my group, do use a note servicing company, but this is my life. And so I'm like, I've done the math on it and I travel a lot, but I'm like, it's literally like the first week of the year, first week of the month is when I'm processing everything. And so we've handled it ourselves so far. Now I have 4 years left. My son's 14 and I already bought a house in the Bahamas that I plan on going to when he leaves for college. So by that time, I may end up using a servicing company, but for the next 4 years, while I'm still here, we do it ourselves. I have
Cool,
zero
man.
employees. It's really easy because we're not landlords. We're not managing. We're just processing payments.
Yeah. Okay, so let's talk about when the buyer defaults. There's always issues that you run into regardless of what strategy you're talking about, there's always going to be downsides to it. So another one that pops out to me here is if your buyer defaults and you're still on the hook for this 12% interest loan that's amortized over 5 years. I'm sure it's happened to you. Tell us, what do you do when you run into that situation?
And I'm going to tell you exactly what I tell people in my program and what I tell my coaching students to do, because this is the way to make it stress-free. So when we fill them, you generally get $3 to $5 grand down. Like in my market, we might get 10 or 15, but let's go with the 3 to 5 in the Midwest.
Just real quick, 3 to 5 down. You're talking about a $90,000 purchase price. So
we'll get 3 to 5,000 down from our buyer.
Right.
So I tell my people to leave the money in the bank account, right? And then you might be ahead $50, $80, $100 a month. And again, I tell them, leave that money. I always tell people, I say, you don't deserve to make $1 till it's free and clear. So we leave all the money in the account. So let's assume 3 months, 6 months, 2 years in, the buyer defaults. And now you have to go to court. You have to hire a lawyer. It's going to cost you $500. It's going to take you 6 weeks. In some cities, like in the Illinois cities, it could take you 3 months. So now you still have a payment to your lender, $667 a month. And then say it takes 3 months, then you still have the time to fill it again. And that's why I tell them to leave that $5 grand in the account. And now you don't have that burden of, I got to come up with money to pay for this house. Yeah. So it always is, as long as you leave the money, there's always enough there to warrant the time that it's going to take to get a new buyer in there.
Yeah. Yep. That's pretty smart. Yeah. And I mean, this sounds like a great strategy. And you've already mentioned Illinois. I think that I probably wouldn't want to do this strategy in states like Illinois that have difficult laws when it comes to evictions because or foreclosures in this situation because
we do regular evictions. We don't do foreclosures. We only invest in states that allow us to do evictions. Some states require a foreclosure. And actually some states we will invest in that require foreclosure, but they don't do it until you have 20% equity, which on the program usually takes about 11 years. So I'm like, listen, if they made it 11 years, then I will go through the process of foreclosing, as long as I don't have to do it after 2 months, right? But we do buy in Illinois. We buy in certain towns in Illinois where there's a really good court process. And I know there's some towns in Illinois where people are like, it's the worst in the world. But we've been very, very fortunate with the towns we do buy in out there.
Gotcha. So you only have to do an eviction? You don't have to do foreclosure? I actually didn't know that was possible.
Because we're selling them on an agreement for deed. Some people call it a land contract, a contract for deed, agreement for deed. So even though it's a fully amortized 30-year note, the deed stays in our name until such time as they pay it off.
Gotcha.
And so if they default, they convert instantly. As soon as they default, they convert instantly to a tenant, and then it goes to a regular eviction.
Yeah, that makes sense. Cool. What interest rate are you giving them on the buyer on the end?
Ironically, it comes out usually to like 11.71, and it's a less than we're paying, which everybody's like, well, how could you charge less interest than you're paying? I'm like, well, we're paying 30,000. We're paying interest at 30,000 on a 5-year. They're paying interest on 90,000 on a 30-year. So generally it comes out to mid 11s.
Yeah. And it makes sense because, in your payment, it's amortized over 5 years. And so you're making more principal payment than you are interest. And, on a 30-year note, it's pretty much all interest. So makes a lot of sense, man. I love it. What is the next question that comes to my mind is scaling, because I can see this working if you're working on 1-2 houses. But when you want to do, you mentioned you have over 100 houses. When you want to get to that level, how do you scale it? How do you deal with all of the minutia that's coming at you?
So it's not complicated. So I have 178 right now, and I think I'm going to stop. I'm always debating. I think I'm going to stop at 200, but then sometimes I'm like, maybe I should just go for 2,000. I really don't know. But so it's not complicated. When you're buying in this price point, there's packages. So my last 2 deals, I bought a 20-house package and a 10-house package. And I like those a lot because they excite me because it's something to do now. When you buy one, I'm like, all right, one more house, right?
Yeah.
But there's not a lot of work involved because, again, we never see the houses. So we find boots on the ground out there. We typically find them through one of the Facebook groups, a local real estate investing group in the town we're buying in. And we'll hire, we'll get somebody for $100, $150 to do pictures, video, put a sign up, put a lockbox on. And then we do the paperwork through DocuSign, or sometimes we'll use, like in Illinois, they have to be done at a lawyer's office because they record them there. So we'll use a local attorney who'll do the paperwork. So it's not like it's us doing much of anything. Like I said, I'm staying home today and all the work I'm doing is on the phone. And there's not a lot of, I'm not physically out there looking at any house. I'm not physically fixing anything, talking to anybody. It's all, over the phone and the computer. We don't actually go to the houses.
Cool. Yeah, makes sense. And when it comes to finding these properties, are you guys, I mean, I'm sure you're not looking on market. Is it mostly off market, direct mail, texting, that kind of stuff?
Yeah, so two different ways. So in markets like my market, I'm in Hampton Roads in Virginia. It's really hard to find them now. And I started buying them here, but now the market's gone up so much, it's hard to find them. So in my market, we still do find them, but I find them through marketing. I do direct mail, and I also do a lot of internet marketing. In the Midwest markets, they are readily available. I mean, you can find them on Zillow, and you can find them in Facebook Marketplace. You can find them listed on the MLS. In the Midwest markets, they are available. They're readily out there.
What specific markets in the Midwest are you most excited about?
We're St. Louis, Cahokia, Illinois, and Indiana.
Indiana, the entire Indianapolis, or just Indiana?
No, I don't have any in Indianapolis. I'm trying to think of the names of the towns. If you said it, I would know it.
Yeah.
But we're in three.
Yeah.
What's that?
Yeah.
Yeah,
So
I can't think of it off
you're
the top
just
of my head.
saying Indiana generally is, it's a
They're
state.
they're very investor friendly, landlord friendly, and there's ton that work for the price points.
Okay.
It's crazy because I have people tell me sometimes, they're like, "You're making it up. Houses don't exist for that price." And I'm like, just pick a state or do the whole country and just do Zillow under 50,000, right? And you'll see what pops up. And then you'll look at the Zestimate or the rent Zestimate, and it'll be like, well, it's listed for 22 grand, but yet it says it brings in $900 or $1,100 a month in rent. I'm like, how is that possible? And and then we test it. We test it with ghost ads, and then I'm like, all right, if the ghost ad works out, then rock and roll.
Oh,
and
man.
I've been doing its program since 2011. So sometimes people are like, "Oh, that's untested." I'm like, "No, it's been pretty well tested. We've been doing it for a while."
So it sounds like in this situation, it also has to work it only works under 50,000. It's not going to work when you get into the coastal markets, or anything, or 100,000 plus.
Right. So I do have some. I have my highest price one is 875,000. They do have ones that work with the higher dollar amount. The challenge is there's two sides to a slow flip: the buy side and the sell side. Right. The buy side is where we try and pay them off in 5 years. The sell side is the selling on 30-year financing. So on the higher dollar houses, the slow flip still works, but only on the sell side. The numbers don't work to pay them off in 5 years. So I do have some high dollar ones. I have a lot of high dollar ones. Some range 550, some 275. My highest dollar one is 875, and I love them. And we make good money with them, but they're not going to be paid off in 5 years. Those ones we'll do sub twos and sell them on a slow flip. So there's multiple different ways to do it, but my ultimate plan is the free and clear model, which takes the 5 years.
Yeah. Yeah, I always love hearing about new strategies, especially when it comes to single family, because that's the most accessible asset that anybody can buy out there, especially if you're getting started, just going out there buying a single family. And it sounds like this is a great strategy to get started on, because then you don't have to deal with the management. So
right.
I love it. I loved everything you said. I took a peek at the clock. It looks like we have run it down. So it's time to jump into the quick question round. Are you ready?
I'll go for it.
All right. Starts with books or any form of education. Give me 2 recommendations, one for general life wisdom and then one for real estate specific.
So, one of my books that's one of my favorites, which everybody probably read by now, is the 4-Hour Work Week. I always really enjoyed that because that really started getting my mind more into, I don't want to work all the time. I just want to have stuff to produce freedom for me, which is the whole focus that I train on, is always freedom first, freedom, 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 not the most money possible. I'll tell you a book that most people don't know or read, and this is real estate related, but I really like it. Mind you, I know him, and you probably know him too, but is Life and Air, Sean McCluskey's book. Have you read that?
I haven't read it, no.
Actually, I wasn't expecting to enjoy it as much as I did, but I thought it was really, really well written and really good. And again, it's one of those that makes you think about why are we doing what we do? And it's really for freedom, not for the money. And I think the more you put that in your head and you're clear on what you're doing, because if you want more money, you can always get more money, just work more, trade your life for money, right? And between those 2 books, I think they're really good at getting your mind right into what you actually want, which is freedom and living your lifestyle, right?
Yeah, I even have 4-Hour Work Week here on my desk. It was given to me a while ago, and I haven't gotten to reading it. I know exactly what it's going to say, and I have wanted to read it. I just haven't gotten around to. So maybe this will be my
I think it's
my
worthwhile
motivation to go out there and get it done. And what was the name of the second book again?
Life and Air. It's like Millionaire, but with life.
Life and Air. Okay, gotcha.
Yeah.
Right on. All right, next question is for your younger self. So let's go back to the Scott back in 1994 when he just bought that house for $5,000 down. Go back to him, look him in the eye, give him one piece of advice moving forward.
Don't believe the hype about leverage and debt. Buy as much as you can and wait out time and pay them off.
There you go. There you
Yeah.
go. All right, next question is about your business. The first three positions we hire form the foundation of our business. So what were they for you, and would you do it differently if you did it again today?
So I used to run a scaled business where I had a lot of employees. I ended all of that in 2013. Ever since 2013, which hard to believe it's 10 years already, I'm sole. It's just me. I have nobody. I have no team. It is just me, and I like it that way. Now, it doesn't mean that everybody should do that. Some people are all about, they're good at managing people, and they're all about scale and want to build a business that runs on its own. But if that's not you, or if you're like I am, there is no, I do less deals than I've ever done now, and I make more money than I ever made. So I'm always like, well, what are you in business for? Do you just want to have, say, investors have this flaw in their personality where we always judge by how many deals did you do last year? How many deals did you do? Never how much money did you make, right? Because I know people that are like, I did 100 deals. Well, I'm losing money and I got to figure out how I'm going to pay my bills, but I did all these deals. And so I had that moment of clarity in 2013. And ever since then, I've been by myself, and I love it that way. And I'll never go back.
Yeah. Yeah. I'd rather make $1 million on one deal than $1,000 on 10,000 deals. So
Yeah.
it's all about just what is your goal? What are you actually looking for in life?
Yep.
Which brings us to the next question. Actually, this is not related to what we were talking about, but I'm still going to go into it. This is about your favorite way of finding good deals. What is it for you?
So my favorite way, my best deals always come through networking. And that's always, my best deals are always through networking. People that know me and know what I do. I'm always big on making sure everybody knows. However, my most consistent is going to be the internet. I do pay per click. I do a lot of I have more reviews in my market than anybody else because I concentrate on getting reviews, and that helps. People don't give enough value to something that's free, which is Google reviews, and they don't put an effort to building it. And I have so many deals I get. And my biggest one I just closed recently, $250,000 assignment fee on it. She chose me, and I'm not even in her local market. I had to drive an hour and a half to get there. She chose me because she says, nope, I read your reviews and I want to deal with you. And I'm like, but I almost didn't want to because it wasn't in my market where I buy. But she was like adamant about, I want to deal with you. And I
Wow.
think about how powerful it is for something that's free. If you can just spend the time and energy on to concentrate on every day, we have to work on more reviews.
Wow. Yeah, Google reviews, it's amazing. When I bought a facility a while ago, a self-storage facility, and it didn't have a website or anything. We put it up on Google. And like the instant we put it up, we bought this facility. There was a whole bunch of delinquent people. We had to kick them out because they hadn't been paying the seller that we bought it from. And one of those people, the instant that we put up the Google page, they gave us a 1-star review. We've been getting a ton of calls for people to come and, rent out a self-storage unit. And then we noticeably saw the calls go down the instant that we got that 1-star review. The Google listing wasn't up for maybe like a week. But man, those Google reviews definitely help, which is why doesn't matter what your business is, always reach out to your customers and ask for a review, because getting reviews higher really, really makes a difference. So I totally agree. And I'm glad you said that. All right. Next question is about the US. We've already kind of mentioned this one, but I'm going to ask it anyways. Just give me the single city you're most excited about investing in today.
Well, most excited, I would say my market. I love the Hampton Roads market where we are, especially for wholesaling, for rehabbing. We still buy slow flips out here. We have a great market because we have tourism as well as the Navy presence. So we have a pretty stable market, and we're on the beach, so it doesn't hurt. But that is my favorite market. I buy in several markets, but this one is my favorite.
Cool. All right, everybody is given a gift that we uniquely provide this world. So, what is your Superman strength?
I think one of the things that I think I do best, and I'm told this often from people I work with, is my ability to simplify things. Because I'm not to put myself down, but I'm not uniquely smart, or I'm not tech savvy. I don't do anything crazy, but I have a unique ability to simplify the process for people. And I think that's what makes my students so successful, is because I don't have crazy softwares and formulas and all kinds of stuff. It's a matter of step by step, go out and do this. And I think I hear that most of the time from people, is that's why they were so successful, is because I made it so simple. And I made it simple, not on purpose, but because I'm simple. And that's the way I do things.
Yeah. I feel like you can also tell if somebody really knows what they're talking about based on how simple how they can simplify the process. If they're talking about all these different things that they're doing, and they put in layer upon layer of information, then I just feel like they don't actually know what they're talking about. But if they just really simplify the process and talk about step 1, 2, 3, then obviously they know what they're talking about. So
yep.
All right, that leads us to the very last question, and this is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. What is the best way for them to do that?
Well, actually, I don't know if I told you before, I had written a book, just came out recently, called The Art of the Slow Flip, which literally goes through exactly what we do step by step from beginning to end. And I'm giving everybody that's your listeners a free copy of it, and they can get it just by going to slowflip.com. And it's just pay shipping and handling. I think it's $7.95. So they can go to slowflip, slowflip.com. And that book is the best way to see if it even resonates with you, because some people hate the idea of the slow flip. They're like, I love my house. I don't want them to buy it. Right. And then some people read it and they are just like, that is what I want for my life. And so I always think that's the best place to start, is just by reading the book.
Cool. So that is slowflip.com. I will put that link in the show notes. If you all want to reach out and get in contact with Scott, and then get that book, take advantage of this strategy, go ahead and click a little more in the description. It'll pull down that full description. In there, you can find Scott's link. All right, man, that wraps it up. Thank you very much for hopping on the show.
Perfect. Thank you for having me. And you have a fantastic day out in Seattle.
You too. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe, at therealestateinvestingclub.com. And if you guys want to support the show, all we ask is a like, subscribe, share, all that jazz. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.